Farmer Michelle here, back with part 3 of Unknown for Small Farm Economics and Financials. I am a small mixed vegetable farm, a specialty crop farm out of Troutdale, Oregon. I own and operate an LLC farm business, and I sell direct to consumer. I think we often forget that farmers are entrepreneurs, are self-employed, are small business owners. We own and operate a business. And as such, we have to file taxes and meet certain requirements, policies, laws that pertain to us. And I think we often forget that farms are businesses. We're not just farms, we are like any other business out there. And I can see that lack of nuance come through in conversations with people. So I started this series because I saw a gap in understanding how farms are owned and operated and what that means financially to our communities and to the farmers, and how that drives decisions that your farmers are making. So I wanted to go over business structures, and that is how we organize and how we define ownership of a business. And I want to say that I have owned and operated a business in both Oregon and Washington. So I've seen two states on how they set up and register small businesses. And I've sat in many workshops with many people from across the United States and have kind of gotten glimmers of what it means to own and operate businesses in other places. So each state, county can be different, but we're going to go over some broad strokes of definitions of different business structures and ownership structures, ownership organization. So to begin, we have proprietorship. That simply means business owner. Or property owner is kind of one of the linguistic derivatives of that. So proprietorships, typically a sole member proprietorship. A single member, one person owns that. Then we have partnerships, which is similar to partner proprietorship. Obviously, a partnership implies two or more people. So you have multiple people. Though I have seen multi-member proprietorships. So I don't know, but there are partnerships. And then we have LLCs, limited liability companies or corporations. I don't know, choose your flavor. An LLC just offers a little bit of limited liability. So removes some of the liability from the person and lays it on the business entity and gives us a little bit of buffer room should shit hit the fan. So that is just a little buffer there. It's good to have. It doesn't cost a lot of money to structure and submit the paperwork to be an LLC. You can have single member LLCs and multi-member LLCs. I am a single member LLC on my farm. And then we have corporations. And I think we often really miss the nuance here. We interchangeably use corporation for a lot. We often mean, when we talk about corporations, the big corporations that you can buy stock in and change stock in, exchange it. And we're talking about like Amazon, Windows, Nike. We're talking big shareholder corporations, multinational, national, large corporations. All of these change how you pay taxes and how the taxes, when and where and how the taxes get applied to your business, to your profit of the business. Under corporation, we have C Corp, which is the traditional corporation we often speak about when we say corporation. We're talking about corporation, C Corps. But you also have B Corps, right? So beneficial corporations. There's some other types of corporations out there. I'm just kind of going over maybe the bigger ones you see. You'll see stamps of B Corps on products that designate that they're a beneficial corporation. So their finances are being divvied up and put into different folders for different activities. This is supposed to be a beneficial. So they have to show or prove some sort of benefit and meet certain criteria to be called a B Corp. And if they fail to do so, they lose that title and they lose those tax advantages. And then you have nonprofits, right? Lots of tax advantages to nonprofits. They are basically multi-member community-owned corporations, and they are not driven by profit. That does not mean that they can't own a corporation. A nonprofit can own a LLC or a corporation under its umbrella. The reverse cannot happen because then that would be tax fraud. Um, and a nonprofit can use that LLC under its umbrella to then fund its benefit to the community, its community benefits. Nonprofits can directly sell workshops at a profit, can sell merchandise or materials or products at a profit, such as seeds, notebooks, sweatshirts, stuffed animals, right? They can sell that at a profit. And that extra money can then go into funding their community benefit that they are offering. So they shouldn't be making a profit. They offset whatever profits they do make with grant funding and are often aiming for a zero sum. They're trying to make it into the black. No one wants to be in the red financially. That's the negative. When things show up in black text color, in black ink versus red text color or ink, then you're in profit mode. It doesn't mean a nonprofit can't make in the black profit so that it can reinvest in mega infrastructure, rebuild the church, rebuild the building, upgrade computer systems, but we have to budget for and earn that money to do so. They do get special tax advantages for being a nonprofit, right? So all of these come with different tax liabilities and responsibilities to meet. You'll see that S Corp here is arrow marked in between an LLC and corporation. It is an S corporation, but it isn't a corporation. It typically lands right here in between. You're an LLC electing to additionally file as an S Corp. It gives you some of the benefits of corporation, but keeps you small like an LLC. The advantage here is the small business owner being able to have a pay stub, have traceable and documented income. And there's a lot of benefits to that. There are certain thresholds you have to meet. One of the big ones being like $100,000 income. I haven't yet figured out if that is net or gross income, as we previously spoke about. And there's some other stuff about it that is complicated that I haven't gotten to. I would love to elect to be an S Corp as my LLC, but for those advantages, would have made buying my property a lot easier. Instead of doing like a bank statement mortgage, essentially, and letting them dig through everything. I would have had pay stubs and proper like W-4s and W-2s all documented and filled. That's the advantage there, is being able to like track your income. Otherwise, these other entities are considered pass-through entities. What that means is the business makes all that revenue, and then we subtract our EBITDA and our cost of goods and our payroll, and that leftover profit is the owner's income. The owner's draw is what they often call it. It is considered profit of the business, but when it comes to me, I have to pay 30% taxes. That's like average American taxes. 30% of all that profit lands in my bank account, and then from my bank account and my personal taxes, I pay 30% after the fact in taxes. That 30% is not like a cost of the business. It just is strictly taken out of my take-home pay. And we'll get into some other payroll stuff in the next video. Lastly, I wanted to talk about cooperatives. Cooperatives can be found in any of these business structures. That is primarily based on how you organize your ownership, who and what and how you make decisions. So you can have many different structures under cooperatives. Cooperatives, you're going to have 3 or more members making decisions under the cooperative principles. So all of these different business entities affect your tax liability and your finances.